Hi, Ben Bracey and Jeremy Harper. We're here to give you the February market update. Jeremy, how's things look for February?
So RBA met on the first Tuesday of February. First time for 2020. They had a bit of a long extended holiday, didn't come back in January. So they've left rates on the whole 0.75. We haven't seen any movement. The RBA is pretty happy with where the monetary policy is sitting. They feel like the GDP is in line with system growth, about 2.5%, and then they're expecting it to go up to about 3% by 2021. So they're pretty happy. They're happy with where the AUD is sitting in terms of strength with the global currencies as well.
Yeah, right. And look, one of the things I noticed too, they were seeing a lot of first home buyers come back to the market.
Yes, so we looked at some data in terms of loan growth. December, which is the latest data, 2.5% growth, which is being driven by owner-occupiers, about 5% growth. So we're only just slightly off the 2017 peak of overall home lending, which is really strong, and about 6.5% of that is being driven by the first-time buyers.
And that's off also the back of a new grant that came out in January.
Correct, yeah. So we'll see that come through in the January data as well.
Excellent, excellent. You look, from my point of view, I think back end of last year, I think we all saw both from a loan growth, but also from actual properties going through for sale. There was a real spike that November-December period. I think our inquiries alone were up 40% for those months year on date, so that's quite significant.
Yep.
And that's now I think that momentum's now transpiring into the new financial year.
Yep.
And it still seems to be very, very strong as we move into kind of February.
Yeah, definitely. And from a lending point of view, variable rates, fixed rates are sharp. So if you're looking at fixed rates are still 20-30 points lower than your variable at that 2 and 3 pricing. So super competitive in terms of trying to get new business in.
Yeah.
There's also cash backs available. Some, we're seeing up to $4,000 to get new business into these lenders. So banks are hungry for new customers. So it's a fantastic opportunity for borrowers at the moment.
Yeah, and I'll probably add to that as well. I think it's a really, really good time to have a review of your mortgage, because we're seeing things sub 3% for owner-occupied at the moment, which is just historically low. Even when we're seeing investment rates now around that kind of 3.5%, once again historically low, there is a real competitive market at the moment. So I think if you've got a mortgage at the moment owner-occupied and it's sitting above that 3, and I've seen some of the 4 still, you've really got to sit down with your broker and have a review, because it's a fantastic opportunity.
Definitely.
Yeah. Thanks, Jeremy.
No problem. Thanks,
Excellent.
Ben. Thanks, everybody.
Thank you.